go to Richard Perry. He's an analyst at Hantec Markets and joins us now live from London. Fantastic to have you on the show. Now, roughly all of the jobs created in the US over the last decade have now been wiped out. How are investors feeling about that ongoing damage to the US jobs market?
Yes, thank you for having me. Well, clearly the labour market in the US is having an immense amount of strain at the moment, and we're expecting to see another 4.2 million jobless claims today, taking the total continuing claims probably to around about 20 million at the moment of the current week. So the amount of strain on the US market is incredible. Now, with regards to how traders and investors are coping with this, well, the expectations were just only met slightly above expectation last week, and there was again a risk negative response to that. We saw equity markets falling away by around about 1% in the next hour. We saw gold prices going higher. We saw the euro dollar going lower, where the dollar continues to act as a safe haven. Now, if this continues to be the case, and traders react negatively to the negative news, well, we could see that sort of trend continuing. But it will be the point at which we start to see positive responses to negative news, at which we could start to see the markets bottoming out in this one.
Richard, let's talk about oil prices. They seem to be recovering after that historic crash we saw in the week. Why is that, and where do these prices go next?
Well, certainly for the near term, they look to be going higher. There's a decent rally going on this morning, and that's been driven by Donald Trump tweeting about the Iranian gunships potentially coming under attack from the US Navy, and in order to defend US interests in the region. So the tit for tat and escalation in that geopolitical discussion and is going to have an impact on the oil price on a near-term basis, but we continue to expect the oversupply, lack of demand impacting on oil as we go forward. Also, the lack of storage in the US is a real issue. So any sort of recovery that we see on oil is likely to be short-lived still, because the fundamentals remain significantly negative.
All right, Richard Perry in London, thank you very much indeed. Appreciate your time.